Okay, we're going to switch formats a little bit here. I'd like to bring up Steve Mott, CEO of Better by Design, and Mark Lavelle, the SVP of Strategy and Business Development for PayPal, for a merchant Landslides, a perspective from PayPal.
It's a great pleasure. I'm intrigued. About half the people here are wearing suits and well dressed up, and the rest are pretending to be entrepreneurs and startup company types, I guess. And while you're having lunch, a company called Snapchat. Anybody use Snapchat here? 3 or 4 people. Got an offer from Facebook for $3 billion and turned it down.
Clearly we're in the wrong industry.
You're better off than I am. Interesting business that we're in. I didn't see Karen's presentation this morning, but it's so dynamic that it's often hard to gain a longitudinal perspective about what happens and what the meaning of all this may be and how real the change is. We all hear from Pam Joseph the 30 years and incredible innovation. I was at Money 2020. There are 400 firms there who don't give a damn about the payments industry, about financial services in the traditional mode, and are just as happy to unplumb everything that's been built up over decades. So when I think about the history of the business, and I've been in the business as long as Pam, and my lifetime achievement is that I'm still married. If you knew me in my younger years, it is quite an achievement. But I had an opportunity to come down here and talk to fireside chat kind of format with Mark Lavelle. And I've been trying to pin him down for months to ask him a bunch of questions and hawk some consulting business from him. So I have a chance to do that. But what I'll tell you is that I've got 3 pages of questions down from 8.5. So I am happy to go through the questions. I think they're relevant and useful. But I'd also suggest that toward the end, if somebody has some questions, we will be happy to take some of those if I can see through the glare of the lights. So I first met Mark back in the early 2000s. And it seemed like 3 or 4 times a year, it was in a dark, exotic, expensive bar in Las Vegas. And every time I saw Mark, he was well behaved, he didn't drink too much, and he was relentlessly optimistic about this company called Bill Me Later. And I must admit, a lot of people in the payments industry, when you got started, that was what, 1999, 2000, somewhere in there?
Yeah.
At the end of around the time that the internet bubble ended, people thought that was a very unusual and odd idea. Fast forward to 2008, and Mark was able to turn that, after 9 years, turn that business model into reality, and PayPal bought them. Fast forward to, and he's been doing business development at PayPal since then. My first question will be ask Mark to disavow what I say and tell you what his real background is. But fast forward to May of 2011, when Google announced the first mobile wallet and how it would transform the world as we know it. And the backstory on that was originally they were going to do a deal with PayPal, and they kind of left PayPal at the altar to go off and do their foraging on big data, as we heard about in the last round. And then fast forward about a year after that, when MCX, the Merchant Customer Exchange, formed up with some of the biggest merchants in the country, saying, we don't really want to do payments through the mechanism of somebody who wants to capture the data for themselves and make all the money off of the monetization process. And then fast forward one more time to 3 weeks ago, I was at a Google office in New York, and they handed out to a conference something called the Google Smart Wallet. And so if you followed Google, there have been 5, 6 different iterations of wallets, back and forth gyrations and all of that. And I thought this is a little aggressive. It's something that you just stick on the back of your cell phone, sort of like you did with those tags that you could put on the forehead of your dog and walk through the RFID tags and walk through and do a checkout that way. And you're just doing it for contactless. This is a contactless card, one of the few of them there are ever any transactions done on. And you could then just tap and go at the machine. They said, no, it's really tongue-in-cheek. You can put any card you want. We really don't care about the wallet paradigm anymore. So I thought, boy, this stuff is really gyrating even more wildly than before. And it made, in my mind, an inevitable conclusion, which is the one company in the wallet space is the one that's still standing anyway, because we haven't seen anything yet from MCX, is PayPal. And the guy that is creating a lot of the bulk, the heft in making PayPal appeal on both the merchant and the consumer side is a guy I get to interview right now. I'm going to let my first question is to let Mark go ahead and create his own resume and background for you. And then I'm going to dig into a number of questions because PayPal clearly has been in the news in a very substantial way, including with some acquisitions recently. So we'll talk about all of that, but we're going to, the first subject I'd like to get out after Mark disavows my introduction of him is this Bill Me Later experience. Have any of you, could I see hands ever used or tried to use Bill Me Later? Okay.
Thank you.
All right. Did any of you get accepted? Just kidding, just kidding. That was one of the challenges we talked about.
You're still upset about that one decline, one time.
But now I'll turn it over to Mark, and Mark, you can introduce yourself
thanks.
properly.
Thanks, Steve. Pleasure to be here. A lot of the folks associated with this forum are old friends from those days when we were hanging out in dark, expensive bars. But I got to tell you, Steve, the only reason I was there is because that's where you and the payments guys were. It's the only time you can get any time with the industry was in Las Vegas. But that was early 2000. I came to that point in the 90s. I was primarily a credit card issuing person. I'd kind of cut my teeth on the direct marketing and monoline credit. We, as part of First USA, which is now JP Morgan Chase, and very much to your last panel about big data, that industry was all about big data, being able to hyper segment consumers in order to get credit offers into their hands and issue cards into their wallets, and then fight to get that card to be the top of their wallet, so they actually used it when they got to a point of sale. And it was a fascinating time, fascinating industry, some of the best technology, some of the best information science happening there at the time. And we were, our hyper segmentation was to figure out what school you went to or what brand you were associated with, what bank you worked with, and or even what breed of dog you had, and then customize our product so that you would respond to our offer versus MBNA's. And so it was quite natural that when the internet took hold, that we viewed that as a massive place to get new data about the consumer, and also a place to reach the consumer, to have an interaction with the consumer, either to acquire them into a new product or engage them in an existing products. Because truth be told, our hyper-segmentation strategy in the banking industry had grown to jamming about 30 offers into about 44 million households in the US and just hoping you'd open one of them. So that was wearing out. And a group of us left that industry to create we had been fascinated with instant credit technology, fascinated with that we had innovated at banks. Matter of fact, one of my claims to fame is at Citibank, the first internet application that we ever took online, and when we first put up our direct website, rolled off my hands from a fax machine onto a piece of paper, and I walked it over, and we inputted it into a computer. And now it's a very major acquisition channel for all financial services companies, as a lot of you know. But Bill Me Later was taking that technology and trying to use the birth of e-commerce to do something disruptive, which is use information and the power of underwriting to directly impact the point of sale experience, where a big problem in e-commerce was, trust and the friction associated with payment. And as kind of Steve alludes to, there's a lot of skepticism about the model, because at the time, every e-commerce company we went to, every acquirer we went to, every investor we went to said, I'm fine, I use credit cards online. I use my credit card, I don't know what the problem is. All my customers have credit cards. So we fought really against the perception that there was no problem, and we created Bill Me Later, sort of client by client, empirically proving to the likes of, in the early days, AOL, and eventually companies like Overstock and Walmart and Amazon, that it immediately converted customers that otherwise would not have made a purchase, that were there, sitting there in the shopping cart, have even loaded the shopping cart, but for some reason didn't complete the sale. And it became, after, I like to say it was the sort of a 8-year overnight success of building a merchant network attended with that, that we eventually built the company to about 5 million active customers. We were doing about 125 million or so in revenue, facilitating a couple billion in annual sales, and became part of PayPal at the end of 2008. So that's the quick thumbnail for how I got there, and I'm sure there's other questions you might have about the company and how we're part of PayPal and how it was developed.
Well, so in 2008, you went from a startup that you had diligently grown over 8 or 9 years, and now you're into PayPal, which at that point was on, and still on, a very rapid growth curve. A lot of change in people still. How has it been for an entrepreneur to do business development in a company the likes of PayPal, particularly with a parent company like eBay?
Wow, well, this month is actually a 5-year anniversary of having sold Bill Me Later to eBay, and I'm amazed that it's 5 years. I actually ended up moving my wife and four daughters out to California in 2010 to assume this role. I've taken other roles now within eBay, so it's been fantastic, and I'm proud of a number of things. One is the business that we sold to them is a material part of the business now, not just the product and technology, but the people that were part of the business, for the most part, are still part of the business, and having great careers there. We still have offices in Timonium, Maryland that are growing. We have centers in Arizona, and we are expanding globally that business. It's a big part of the company's customer engagement strategy and acquisition strategy. It is, for me, it feels like a big startup because PayPal is only a 15-year-old company. And it has this great DNA in it that almost kind of has a chip on its shoulder from the old days. It started not long before we started Bill Me Later. And it kind of backed into the wallet P2P aspects of what it does. It found that it had this high growth part of the business with a company called eBay. And I used to track it competitively as a startup. I'd open my spreadsheet, and every earnings call after they were bought, I'd put in their numbers. And our numbers are going like this, and then their numbers start going like this. And it's because they had this tremendous flywheel effect from eBay that PayPal was able to achieve the type of scale you need in payments. As you and I talk about a lot, is a lot of these good ideas you have in payments and even great technology or great product experiences never meet with that critical element of scale. And PayPal has been a phenomenal rocket ship in that regard. And once it grew and got off eBay, now that's a bigger part of our business. We operate in about 200 countries now. I can send you money in Singapore dollars and from the United States, and it can convert instantly into that account, and you can drop it. There's just no end to what the global platform that PayPal represents can do. So that's what's made it the 5 years move very, very quickly for me.
Are you still involved with Bill Me Later?
I am. As a matter of fact, this morning I was on a call with the gentleman that we hired to run that business. I'm proud as can be. They know way more about it now than I do. I doubt I could even get hired in the business at this point. But I'm more am involved in setting the longer term strategy. I do acquisitions. I do business development and partnerships. So about half my time's on PayPal, but the other half of my time is increasingly involved in our connected commerce vision at eBay, which is how do we use our technology and our scale to help, what we thought at the time was going to be small, medium-sized businesses, but increasingly large businesses compete in the digital age. And it's a fascinating problem. It's a real problem, I think, for societies, for governments, for countries, that increasingly there's a lot of concentration in commerce and technology, and where commerce and technology, technology was supposed to make it easier for everybody to balance the playing field. It's moving so fast today that the investment is so hard for even large companies that we at eBay see a big role in helping do that. So that's kind of been my last few years is spending some time on that.
Okay, now PayPal's bigger than PayPal, or you have more business non-eBay than you do eBay at this point? Yeah. And how would you characterize the strategy? What are your cosmic goals at this point?
Yeah, cosmic. I have to think about what the cosmic goals are. In Silicon Valley, we think about sort of, how do we beat the company up one zip code or two away from us. But we basically, for PayPal, the strategy is how do we become relevant to our customers' everyday life? And that's important. It has a lot of implications, that statement, because the legacy of the company has been very relevant to customers' online life. About 145 million active customers. That number grows. We had 5 million customers, new customers a quarter. And it tends to be for those online purchases where safety, security, and convenience are the value proposition. Increasingly, mobile has taken over our business. We'll do about $20 billion in mobile payments this year, so it's not an insignificant amount of the larger pie. We've no longer track whether it's cannibalizing or adding. It's the way our customers want to buy. So being relevant to them means being on devices, being digital, being mobile. And so we take a mobile first mentality on everything we do. But it also means we've got to be in the physical world. We've got to be where majority of their purchases are. And our value proposition has to move from just one of safety, security, and convenience to one of providing solving real pain points in their daily lives. And we can get into some of those, but it's a harder problem to solve. I'd call it galactic or cosmic problem to solve, but it's very much needed everywhere we look across the globe.
So in this conference and a lot of other conferences, there's a lot of talk about, and Pam mentioned it today, if it's not broke, don't fix it. And a lot of people look at the payments aspect of a purchase transaction and say, we can do that. We can do it a lot of different ways. I can do it with a card I can stick on the back of my phone and pull it out when I go to
you got to give me that thing. I want to check that out.
Yeah, it's very self-effacing, and that never happens with Google. But now you're in the POS, and a lot of the news, we'll cover some other things soon on, like Braintree, but the initiatives in the POS seem designed to enable traction for using a PayPal account in POS every opportunity that you can. And probably the one application that resonates most with me is the line busting app. And I think you have one with Jamba Juice that you've made generic in your new wallet, where you can order ahead and you can pay ahead and you can walk into a juice bar or something like that, someplace like that, where you might be waiting 10, 15, 20 minutes to consummate a purchase, and it'll be there for pickup and away you go. That handles 5% of the retailers who need that as a business value proposition, where the consumer has a similar attendant value proposition. They don't want to spend the 10 or 15 minutes. That seems like an important foothold. Yeah. Is it? And then how do you get the other 95% of retail? Yeah.
Well, important to note about our strategy is that we're not competing with a swipe. I'd say we're not even competing with a radio frequency transmission, no matter if it's near field or wide field. We are helping consumers access the instruments that they themselves chose to put into their purse or wallet so that they can enjoy their lives and make their lives easier. And we've done many, many studies and discussions, primary research with our consumers, and none of them want to throw their wallet away. But when you get into it with them, especially folks like my wife, I personally ask all the time when she takes her purse out and there's 47,000 things in that purse wallet, right? And there are 5 or 6 things that she uses predominantly, but then there's this long tail of other stuff. And you ask her what she's doing with these things, and they're important things to her. Verizon sent her a rebate card. She thinks there's $52 on that, but she's not quite sure, and she tried to pull it out once and it didn't work and she got embarrassed, but she's not going to throw that away. So while I might not be able to convince her to throw all that stuff away, I can, as a digital service, tell her that it's okay to use that. And by the way, we'll use it first in the places it's usable. And so first and foremost is we're not just trying to replace what consumers want to do and make them do something different. We are a financial, as you said, we are a financial services wallet already. Most of our consumers have multiple payment credentials stored with us, which is unique to any other wallet in the planet and hard to do. And we're expanding that with a company we bought called Card.io that allows you to take a picture of all the cards that you have and will immediately suck up the details of it and make them present in a digital case. Our theory on that is anything that you choose to add into your life that's financial or quasi-financial, if it's in the cloud and protected behind PayPal and we make it usable, it's going to provide value to your life. Now, after that, there's these other use cases in point of sale that you're alluding to. The big one's order ahead. I use this example when I travel a lot, where most of the time, it's sort of similar to how I got here, although it was a little more complicated. I'll leave on a Monday or leave on a Sunday night to get to the East Coast or somewhere else. I will take my wife to a movie. I'll use a Fandango app and I'll buy that ticket in advance so I don't have to wait in the line. We'll get something to eat afterwards. There's a Five Guys burger right next to the theater in Redwood City where we go. There's an order ahead app that we use because Five Guys is phenomenal and there's always a line. I'll get in a car will take me to the airport. I'll get on United. From United, I'll go to a hotel. Every single transaction that I just talked about did not require me taking a credit card out of my wallet, because there was some forethought, there was some pre-notification, some pre-awareness that these are the services I like to use, this is what I'm going to be doing, and payment absolutely goes away. And so when we think about entering the point of sale, we don't think about, again, just replacing existing experiences. We think about where can we really create new experiences that, knowing who you are and knowing where you are and knowing how you like to pay, allows you to get those things in your life done easier, safer, and better. And the last panel I think was great because you got to this concept of prescriptive or predictive big data, which is where I think these services will go in the future, where you rely on certain services that you trust to recommend clothing that you might buy, recommend a restaurant you might go to, or just serendipitously recommend what you might want to do next. These services are the platforms upon which payment must integrate in a way that the next generation and future generations will expect, payment to be made. The Snapchat generations will definitely want a different level of immediacy and predictive value, in the applications they use in the real world.
Okay, so your biggest advantage, I think, is you're able to, based on your track record, attract a lot of merchant adoption. So you have 20 or 25 major merchants that are accepting some form of how you make convenient payment at POS. You've got how many U.S. debit card or active accounts? 100 million?
We've got about 145 million active accounts. We don't disclose the number, but you can think about it as roughly,
Roughly half.
Yeah.
So you have both sides to bring to the table. What's your biggest hurdle then in getting this new value proposition into POS?
Well, the other thing that happened when I moved out west, Steve, is from the time when we were having bars, I became the old guy. I don't know where that happened, but I say things like answers to questions like that in the office as patience. And people look at me like I'm, crazy. As you know, and as we've talked about, changing the physical point of sale behaviors is going to be a multi-year effort. And bringing the customer to that will be predicated on a number of things. It'll be predicated on how great the product experience is and how they perceive it. This all started, when we were integrated into PayPal, the iPhone App Store was only a year old. So you have this series of companies that have just really gotten funded and started to come on the scene. It takes about 5 years, even though it feels like it takes, a year, where in order to get that behavior change, it's going to take a lot of little things, a lot of tipping points. Great products, well integrated, well marketed, and that's what we're focused on, following that data, following how the customer perceives these various options that we're giving them, and then you find what works, you invest behind it, significantly. That's what we can do because of the scale we have.
Or also reject things you think are unproductive. You were the first company to say, 3 years ago, everybody said the way we'll be paying mobile and digitally was with NFC.
Yeah.
The card emulation mode.
Yeah.
And Google thought that was where it was going to go, and obviously it hasn't. Why did you make the decision? How did you make the decision to say this ain't the way PayPal's going?
Well, our response was a little more nuanced to that. It was, and I know sometimes we've come out a little harder on it, so I won't deny it. But I think what we meant was NFC. There's nothing wrong with it, but it is simply another way for an electronic transaction to get from a point of sale to a merchant to a consumer. And we didn't think that the effort and the time required was the end-all be-all of where we as an industry should focus on moving ahead. And since that time, you've seen what has really been amazing to me is the proliferation of the tablet economy, the app economy, the tablet economy in the physical retail store. If you and I were starting a store tomorrow, we would buy equipment from entirely different places than if we would have done it 5 years ago. And we would have different applications, different software. And that is turning over in the retail world faster than I think I would have predicted, as an old guy in the industry. So that's not an NFC connection. That's a mobile customer with a mobile internet-enabled point of sale where you connect it with cloud-based software capabilities, and magic can happen between that triangle. Payment being like the easiest of it, as it turns out.
Yeah. Well, there are 3 or 4 guys out in the hallway that have that option for you. And you and I have discussed earlier today the complexities of trying to change basically a 40-year-old non-innovated POS infrastructure, particularly at a mainframe level. Where do you see which merchants are likely to lead the charge into taking something that's a single-purpose payment terminal into something that's more of a marketing customer service outreach to their customer that you get with some of these iPad-type configurations?
Well, I mean, it's happening in countless places. Maybe because of the turnover or because of the CRM aspect of it, you see it happen in the restaurant and table service and area a lot where, the experience is greatly enhanced when you don't have to wait for the waiter to come back and order you that second drink, which is where all the profit in the industry is made, is when we order that second drink. When we can't, you don't get it. And then the ritual at the end where you got to actually wait for your card to be brought over. That seems to be bought in. You're seeing increasingly at the high end, Delta Airlines just deployed, I forget the number, tremendous number of smart terminals on their planes for their folks to take orders. Lowe's bought 40,000 iPads to deploy against their thing. If you walk into Restoration Hardware, you won't get behind a camera. You'll sit with a sales agent who will have a tablet, and they will be racking up your order and sending things before you walk out of the store. I mean, it's happening not because, in other words, it's happening outside of the whole payment infrastructure discussion. Like, we're waiting to figure out NFC, and we're buying furniture from Overstock and Jamba Juice without use of that technology. So that's been pretty phenomenal to watch.
What I liked about that, I went to Latin America last winter, and when you have those ordering systems, you can also buzz the waiter to quit chatting up whoever the waiter's chatting up to come over and actually give you some service, which if you're overseas is a very important thing if you're an American trying to get quicker service.
Yeah.
Right? There's some real value added for older people there too. So as you think about what I think are relatively cosmic aspirations.
You're saying you don't get a lot of attention from, never mind.
Not like my wife does. So are you doing things that banks should do but haven't, or could do but don't? And are you still interested in partnerships with banks by filling a need that perhaps it's harder to do if you're a heavily regulated financial institution?
I think yes and yes are the quick answers to those. But look, it's pretty clear. I grew up in the banking industry and payments industry, and it's pretty clear that we haven't innovated enough, right? We have not innovated for customers or consumers or merchants fast enough, and there's a lot of reasons for that. But I think that cycle is starting to build, and we're seeing it in our business because young 20-somethings are coming in to the industry saying, I want to disrupt financial services. And they're not even sure what that means, but they're going to do it. They don't know any of the rules that we know. They don't know how hard it's going to be. And they're empowered by technology that they understand and is way cheaper for them to deploy than it was in even my day, Build Me Later. So that's real, right? And that's happening as a comment on the industry. From a PayPal perspective, we do work with banks. We're one of the larger, certainly the fastest growing customers of major card associations. We work directly with banks to integrate our P2P service into their online banking capabilities, something would be very expensive for them on their own to do.
How's that going, by the way? How's the adoption going?
It's going well. It's going well. We've embedded it in Discover card, so you can send money from your Discover card to PayPal accounts. So all these little areas are great. I think as an old issuer that the modern issuer will think about digital wallets the same way we thought about the post office, the mailbox going, to the internet, and which is that it's a place for me to find customers that want my product, and it's a place for me to engage customers that already have my product. And I think that's what the message we're sending to banks.
And how would you assess your relationship, say, with the processors and the networks, vis-a-vis not every processor is signed up to allow your Discover relationship to move forward in terms of acceptance. Yeah. And some people want to apply extra fees to you.
Yeah, patience, I guess. That, again, that relationship with Discover has a lot of opportunity in it. We're already using it in a number of use cases that are very exciting. And the ubiquity of it will evolve, and as it evolves, we'll use it more aggressively as a means to engage our customers if our customers want to use that path. So, these things don't happen overnight, but we feel pretty happy with where things are in terms of our foray into the offline world.
Do you think you're suffering at all from having been certainly the most successful innovator in the payment system over the last decade, and now you're big enough that a lot of people in the traditional legacy payments business see you as maybe taking some of their food off the table?
I think it's more conceptual than that. So we're less than 2% of our addressable market. So we're tiny in terms of what PayPal represents to the overall payment and commerce market. It's fair that what we do, it looks like it could be somewhat competitive with various other products and services. And it's our job to show that what we're doing is actually much broader for the consumer and for the merchant than what a specific financial institution's product might be doing. And that we can't really work if consumers whose products they are putting into their wallets and purses to use, if we don't add value to that product in some way. And that means the brand, that means the information, that means the access that product has to that consumer. So yeah, I get some of the competitive concerns, but if you look 10 years in advance, right, the reality of what the digital world will bring onto payments, and that sort of vignette I described about payments being sort of in the background of everything consumers do in their digital life, then you're going to want to have a relationship with a company like PayPal that can give you access to those customers.
Okay. Let's switch gears a little bit. Another partnership shortly on the heels of Discover was with ADS, Alliance Data Services or Systems, which does private label card processing for, I think they're the number 4. The obvious connection would be you could offer Bill Me Later as a enhanced service on all of those private label customers. But what was the motivation in doing the deal with ADS, and what kinds of things do you think you can do in the future?
Yeah, well, it's been a company that I've looked at for the last decade and really admired, what they do. And when the opportunity came to partner with them, we had a number of discussions, and one was they do have deep integrations with their retail, mainly fashion and various brands that rely on them for loyalty, rely on them to how do I keep and retain my loyal customers, how do I acquire new customers, and it was some of what they do in that regard is provide them private label credit, because credit's always been an important vehicle in that loyalty equation. And the real question their retailers are asking was how do I win in this mobile wallet space? How do I predict the future and make sure that I'm there? And so there was a natural link up between us and Alliance Data on that. And we don't operate as a bank in the United States. We do operate as a bank in Europe. So we partner with strong financial institutions. So Bill Me Later is issued through Alliance Data, and so it's a very healthy relationship that I think will continue to grow.
Now, you have for years done your own version of instant credit. So I know even when I didn't have a balance, when you stopped paying high interest rates on the stored value, I would always get a transaction done because I had my DDA account backed up by my credit card to be able to pay. And I did a ton of transactions with you, so did my family. So I never had any problem. I think I tested the limit. I got $2,000 in credit on 4 or 5 travel reservations within about an hour. And I thought, that's really pretty good.
Yeah.
Is this, taking Bill Me Later and ADS, and are you moving into the line of credit business, issuing type of business at all?
Well, we are in that business. It's a small percentage part of what we do. I think it always probably will be, but it continues to grow. The thought behind that is that we've got such tremendous data to bring to bear on some of the hardest problems as an industry we face. PayPal's traditionally done a great job at using that data to vouch for small sellers to the rest of the financial payment industry that couldn't, understand who these sellers were and were risky. And we've done a great job at figuring that out and growing businesses and growing jobs and bringing in commerce that otherwise would not have been digital or might not have happened. And so using that data to also lend, to consumers is a ambition of ours, is a skill of ours that we partner with banks, to provide. And when you get right down to it, we think about it as not a way to build a big loan portfolio and charge interest. We think about it as a way to make commerce easier, to remove the friction between what a consumer wants and how they get it. That's what was always behind Bill Me Later. That's what's behind PayPal, is how do I use my data to make the ecosystem that we support healthier and grow faster.
So I noticed a few weeks ago, ADS announced a deal with Dwolla to do some sort of instant credit provisioning. Is that something you view as at all competitive or reflective of where you might be going? And how do you view Dwolla in particular?
I don't know much about that, what they're doing, but I think that, again, it's the back to the comment of, I think it is very positive that some of the brightest young entrepreneurs and some of the risk capital that goes into creating these companies are impacting our industry as a whole. And that means that we'll be more competitive, right? Because we'll need to compete. And that means that new and fresh ideas and ways of doing things will be apparent to us, and we can choose to look at those and adopt those, or as I'm sure you'll get to ask me, acquire those perhaps.
Maybe so. So Dwolla's view of the world is payments should largely go free in a digital environment. Under $10 for free, anything from $10 to $10 million, no more than 25 cents. Is that a business model?
It's a 25-cent business model. There certainly is room for cheap, fast, easy transactions, and I think working the cost out of the business helps us all be competitive. We are very sophisticated users of the banking system, ACH, various forms of debit, and so we look for ways to push costs out of the business all the time. If there are new ways to do that, we're very interested.
Okay. Shift gears again, the Braintree acquisition.
Yeah.
A lot of us found that to be rather fascinating, particularly the Braintree's recent initiative of the Venmo Touch.
Yeah.
Can you describe what it is you think you got for your $800 million?
Well, we got a fabulous company with a fabulous management team first. As we look at acquisitions, and I've had the privilege to do over a dozen of them since I've been tenured there, we look in the eye of the management team and ask them if they believe in what we believe and where they're going. And we found a very passionate CEO there and team around him, and then we moved to how can what they are trying to do be more enabled by being a part of us. Mm-hmm. And if there's a fit there, we move to the next level, which is how does the product fit? What's the market overlay? And what you found with Braintree was they had done a great job at being at that point in time where the mobile economy and the e-commerce economy and the venture, entrepreneur economy met and created a whole series of phenomenally fast-growing companies that never even started on the web or the physical point of sale. We've never seen that before. Companies like Uber and Fab and Airbnb and this was a trend that nobody really predicted, but was wholly mobile-based services that really integrated into the lives of their consumers and found traction. And they were the payment engine behind that. And they had done a great job executing that, and so we were very impressed. The Venmo part of it is very interesting, a P2P application. You might see the P2Ps having a new look these days from a number of people. And a lot of young folks are using P2P through Venmo, and they've done a great job at design, about making the product simple to use. And the other thing is the app economy, as we continue to move from application to application, much like cookies did for us in the e-commerce world, the ability to tokenize a wallet or a payment relationship and recognize who that customer is from one application to another was something that PayPal was innovating and Braintree was also innovating, and we think that's going to be a very powerful customer engager going forward.
Yeah, so that deal, the Venmo Touch, feels to me like they have 90% of the e-commerce transactions processors, allowing them to participate on the merchant adoption side. They can go to a bank, say with a dedicated customer base, and sign up 2 million of whatever the top of wallet intended card would be, and then Braintree sort of sprinkles the acceptance, the virtual acceptance, like pixie dust over the 4,000 merchants they have, and how many merchants do you have in PayPal?
We have over 8 million.
8 million. Yeah. And now all of a sudden the payment is not only no longer transparent, it doesn't even appear except as a token. Yeah. Is that Star Wars for the payments industry?
Yeah.
Is that where you're going?
It sounds like we got a good deal.
Can Braintree do that at POS?
I think that is possible. Let's take Braintree out of it for a second.
Yeah.
Again, I think the awareness of who you are, driven predominantly by this phenomenon that we all have these or multiple ones of these in our lives and they never really leave our hand, is what will create great experiences in the future for payment related. So we introduced a product called Beacon that is very exciting to me, and it is the way that if you're a payments geek, you've been wanting to have happen for a decade. The technology is just now deployed in enough places where, a Bluetooth low energy is a lot cheaper than NFC, so a lot more deployable, and very flexible in how it can engage you and where it can engage you. So when I walk in to get my breakfast or in my office, my phone will have a specific buzz as I get next to the cafe, telling me that I've opened a tab with that point of sale register. I'll pick up my coffee and my bagel, and I'll go to the register, and they'll say, "Hello, Mark," and they'll press something on the tab, and I'll say, "Have a nice day, see you tomorrow." I will have never touched anything, and I'll get this buzz as I walk away that says, "You've just got paid." And if I want to look and see how much that was, and want to say, "Wait a minute, is that really right?" I've got all the control. I could turn that off, and so having those that's Beacon. All right, that's the next generation of how an internet-enabled point-of-sale system, an internet-enabled consumer connected with a cloud service like PayPal can drive real goodness in our lives. So.
And further diminish the prospects for NFC in the process.
Well, you said it, I didn't.
Especially with Apple doing it as well. So it's a real free-for-all then when you think of all the technology out there and all the different ways you can manipulate a digital payment with the marketing back end and that sort of thing. Clearly the payment compensation as the driver of the historic business model will over time go away. Durbin as a good example of how that happens externally. How much of marketing upside is there that PayPal can participate in, including the ability to drive incremental transactions, both for merchants and with Bill Me Later consumers, giving them a chance to pay for something they want right at that moment in time?
Yeah, I don't know if the implication of your question is something that maybe I'm too old and need to be put out to pasture on this. But I don't think that the payment industry just reverts to an advertising model. I really don't ever think that happens. I think that the industry provides a service that is worth paying for. It has integrity, safety, soundness. It's a lot of technology. It's a lot of skill that if you do it well, merchants are more than willing to pay for it. The other and separate question, in my view, is the data intended in a transaction, and the data both on the merchant side and the consumer side and an issuer side. Where will that be used and how it will deploy? How will it be monetized? Is to me a separate, very interesting question, but again, one fraught with some peril over getting too far ahead of what the consumer wants in this regard.
Or maybe not getting far enough. So I keep getting an ad from Amazon for a coupon to get rid of toe fungus. I have absolutely no why. I've never had toe fungus. No one in my family. I don't know anybody who's had toe fungus.
You should probably go check.
As a consumer, and of course I'm a geek studying all this, when are we going to get to a point that there's really some relevance? It seems to me that not all boats will be floated with everybody still trying to pump the $2,000 or $3,000 that the average $50,000 a year household has for discretionary purchases. And how many times am I going to want to shut off Amazon if they keep pitching toe fungus medication?
Yeah, so when I say fraught with peril, I mean exactly that, which is, I don't think that consumers, certainly the Snapchat consumers of tomorrow, are going to be surprised that we know everything about them. They'll actually expect that we do. So it won't be as much. Privacy is a very important concern on this, and products need to be built for that. So blanket statement to anybody here, privacy is very important. Now, that type of consumer of the future will expect that we know who their friends are, we know what their preferences are, and we will lose them quite instantaneously if we use our presence with them to recommend stupid things. We'll get absolutely one shot at it. So that's where I think the stakes are high from a payment standpoint, is you expect certain things from your payment services that you provide that are different than what you expect from the social or search or commerce companies that you engage with. And so I think there's a role for wallets, for payment companies to use this data better than we've had. But I think the relevancy barrier is quite high for us. If we're going to turn it into a consumer or merchant-facing service. So it's an interesting area to delve into. But
Well, I'll use Amazon as an example again. I buy a book as a gift, and the next 18 emails are similar books in the area.
Yeah.
And the gift for the person I gave might be an area that I have no interest in at all. What's it take to just have the provider of that, facilitator of that transaction say, is this relevant to you? And what would be more relevant to you?
it takes absolutely astronomical scale. Because not even Amazon, right? Amazon doesn't know where you are or who your family members are or what gifts you're, they only have information relevant to your interactions with Amazon. A credit card company only really has access to the transactions you're doing with that company. They don't necessarily know where you go every day, what other activities you engage in, what your search life is like when you're online, what your social engagements look like. So in order to drive somebody, again, the example from last panel, to be able to know whether or not it's a good use of an impression to suggest to that person that they get a free Coke or no, they actually want Fanta. The scale of data and information you need to have to do that is pretty high. Otherwise, you end up blanketing these and get lower response rates, and then your service gets diminished. So, I mean, Google's probably the closest at being able to do some of these things with very predictive capabilities about when I'm in San Francisco and I type an S. They happen to know on my calendar that I was going to the Giants game, and they know that I actually mean AT&T Park. They know I'm looking for directions. That type of predictive analytics will be the next generation of how services will be built for consumers. And the most successful ones will be the ones that deploy those well, so that it becomes almost a sixth sense of what a consumer wants, and they come to rely on it.
So I would guess between myself and the iTunes account that my 3 sons use, we've done 400 or 500 transactions a year with PayPal for a decade. When are you going to ask me more about myself so that you can market to me more effectively?
Well, thank you very much, first of all. We don't probably do as good a job at this as we should. And so there's a bit of, to my last statement, I think you should sense a little bit of humility in our position with a customer and what we do with that data. What differentiates us from other, I'll call it non-financial companies looking to get into the payments market, is we understand the relationship that we have with you, that what you're doing is looking to buy your iTunes, right? You're really not looking to engage with PayPal on do you want a golf club or things like that.
Well, I do 100 trips a year using hotel and rental car and airfare purchases all the time.
Yeah, we do our best job at authorizing those transactions for you. We don't purport to do a good job at predicting what you want to do next with it. While we probably can, and we look at those things and we do know them, we don't commercialize it.
Okay. We have about 8 minutes left. Any questions from the audience? I have more, but I'd love to have any questions from anybody out there.
Side of the room.
There's the gentleman up in front.
I know that collectively eBay and PayPal shies away from digital currencies such as Bitcoin and Litecoin. Is there a particular reason, and do you plan on moving to that in the future?
Steve smiled because he wanted to put that zinger.
Thank you.
We are.
Would you repeat the question, please?
The question was about digital currencies and Bitcoin and our view of it. We're fascinated by it, number one. Far from shying away, you'd be amazed at the interaction we have, number of discussions I have about it and what we've done to look into it. On the broader subject of digital currency, I think our job is to, first and foremost, integrate into our wallet and into our ecosystem anything that our customers want to use. And so we're going down the list of the things we don't have and making sure that everything you use in your daily lives to pay or to get points or to redeem is usable and it's better in the wallet. There are, if and when other currencies like Bitcoin become a big part of what they do, then perhaps we would take a look at how we also allow those to pass through. But it just hasn't been a big one from a volume standpoint for us to get too far ahead of.
Although I was telling some people at lunch, I did a presentation on virtual currencies at the Association of Financial Planners annual conference in Las Vegas in early October, or late October, and it was standing room only. A lot of corporate treasurers who are quite fascinated by the prospects of a fully digital currency with good funds and the ability to move real time. Other questions?
Agree with that.
Okay. Follow on from my last question. So there's a initiative out of the White House called NSTIC, National Strategy for Trusted IDs in Cyberspace. And my version of perspective on how that group has been working to develop a digital ID is that the four most prominent contributors to that effort are AT&T, Verizon, Google, and PayPal. Are we on the track to get to at least a digital ID, if not a national ID, so that identification of myself as an individual consumer or a small business to be able to transact without worrying about payment credentials, without even worrying about what funding type I'm using, because somebody in the cloud is going to say, oh, you don't have enough credit line, you can do a bill me later, or you don't have, there's some in your prepaid that we could use to supplement your DDA account. Is that real or is that a fantasy? Because it seems to me banks, and a lot of people depend on banks for their food at the table, that may be the direction as opposed to payment fees they need to go for the ultimate business model.
Yeah. Well, as a financial services company, we take very seriously the identity, that our identity means that it's protecting your bank account or your credit card or your financial information. So we engage in all conversations that involve how identities are going to morph and get used in the digital commerce age. But it has been a fascinating conversation to see how social identities and other various forms of identities are going to work together in order for the services that we want to provide people can be delivered more frictionlessly. And if the idea of a national identity would be great. I think it would probably serve a lot of the governmental needs and such. And if it were to develop, we'd want to see it develop in a way that it could be interoperable with other identities that had different meanings to you as a consumer. Because I don't know that from a consumer perspective, we're all looking for one identity. We're looking for the identities that we use to recognize each other. Your Facebook identity knows that you're a PayPal customer, for instance. Your Apple ID knows that you're a PayPal customer, for instance. You don't need to log into various levels. That's the type of interoperability we think just makes commerce more frictionless.
Also, poll one last time for questions. Anybody else? So follow up on that. So if I look at the top 12 or 15 P2P sites or systems out there, most of them work the same way in their internal network, account to account. Mm-hmm. But almost all of them have for external access, you guys. And you guys are you close the last stitch in the knitting to make sure that the system can work in a more ubiquitous way.
Yeah.
And if that's true in P2P, is that a role that you ultimately can play to sort of put the knitting together for digital transacting because you're in so many places?
I mean, that's the power of the network business model that we have. We have the merchants, the consumers, and the financial instruments, and the trusted identity as all key ingredients, and it operates at a global scale. So it is the cheapest, safest, easiest way to remit and receive funds all over the world. And everything we do, everything we think about strategically, tactically, is around adding value to that network. so that more participants come in, and the participants that are in it benefit from more participants being in. And I think that, liquidity and ease of funds transfer is just central to our mission.
Okay. And one last question from me, switching gears a little bit. I've been working with a couple clients on small business needs, and one of the continuing, and this has been the 30 years I've been involved in payments, gaps, particularly from the legacy financial services industry, has been cross-border payments. And you see with the European Community's proposal to drop debit card interchange to 20 basis points and credit card interchange to 30 basis points. And the only reasonable alternative for a lot of these small businesses doing cross-border payments, and I do that in my own business, is PayPal. Mm-hmm. How is that a big opportunity, or is that just too convoluted and hard to get at to make much in the way of inroads? Because it seems to me you could make a ton of money if you could automate all that under those economics.
I think that it's probably been an underappreciated area of capability in the company. And a lot of it was, like, we're getting into India, there's a lot of regulatory and compliance things that we have to do to operate that we used to view as sort of a tax on our business or just a business expense. And what we're realizing is that's a huge benefit that we can provide to our customers. And being able to manage that and all the various costs involved with AML and SARS and things like that, a small business would never even begin to be able to do. Not only that, but able to find customers in other parts of the world and transact with them is a huge benefit to being on the PayPal platform. And so I've become increasingly passionate about the problems of small businesses in the digital age, about their ability to reach a global customer, about their ability to go from knowing that they had a physical site, they needed a website, now they need mobile sites, now they need social sites. Having that scale, having a partner that can work with them to solve those problems and grow their business is something that eBay Inc.'s vision is all about. So.
Okay, good. We're out of time. Thank you, audience, and thank you, Mark.
Thank you.